Should I sell my stocks? It's possibly one of the most common questions in the stock trading world. Some say that when to sell stocks or hold them mostly depends on your age. So if you're closer to or at retirement age, you've likely been investing for a while and can sell your investments to live off of your retirement. But what about those who have already invested in their 401k, Roth IRA and index funds? If you already have your retirement account sorted and are now just experimenting with different individual stocks, should you still sell? Or do you keep hold of those stocks for later in life for an even bigger retirement? That's what I'm gonna talk about in this video, so stay with me if you want to discover whether selling individual stocks is the best move for you and when it isn't. Also, don't forget to subscribe to the channel and hit that like button if you want to see more like this. How to know when to sell a stock is the million-dollar question. And yes, there is an answer to this question. Actually, there are 4 of them, and here they are. We all make mistakes, and when it comes to the stock market, you can never be sure what will happen. If you have individual stocks that appear to be consistently underperforming, it may be time to cut your losses before those losses stack up even higher. However, if you believe the market will recover, which it usually does, you may decide to hold on to your stocks and ride out the waves. A lot of people will suggest you do just that, and for the most part, that's good advice. If you have index funds, then this is almost certainly what you should do because the market will recover, and if your index funds are down, it means the whole market is down. But what about the exceptions to the rule? Is there ever a good time to sell a bad investment? Here's how to know when. Let's say you have a consumer goods stock that has halved in value over the past 3 years. It's consistently going down. Now, before panic selling, take a good look at the wider industry. If other goods like it are also in decline, then you know it's the industry, not just your stock. Everything's doing poorly. This gives you a bit of extra context. All industries experience declines for a variety of reasons. Maybe the industry is no longer as viable as it once was, or maybe competitors have changed the playing field a bit too much. But let's talk about this conceptually to understand when to sell an investment for poor performance. I mean, if you pulled up a list of your investments and saw this chart, then what would you do? Holy crap, you might be saying, that's a crappy stock, I need to sell it before I lose all of my investment. Whoa, slow down. Instead of freaking out and selling your stock, look at the context. Knowing that the example is a consumer goods stock, how is the rest of the consumer goods industry doing? By looking at the stock and the surrounding industry, you see that the entire industry is in decline. It's not your particular investment, they are all doing poorly. Now, this raises questions about the industry, but it also gives you a context to explain your stock's plunging returns. And just because they are plunging, by the way, doesn't mean that you should sell immediately. That's part of the reason why buying individual stocks can be a bit of a pain. You need to keep a close eye on them and their respective industries to check performance. Your money is often better off in an index fund where it's spread across multiple companies. Investors will often set a target price when they buy a stock. This is the figure that they would be happy to sell the stock for. Now, while a set price may be difficult for even the most experienced investors, having a price range in mind gives you a solid enough target. Once you've reached that point, consider selling it and enjoy the gains. Another good time to sell a stock is when you reach a money goal. Buy and hold is a great strategy for ultra long-term investments, but lots of people invest in stocks to hit short or medium-term money goals, not just retirement. For example, I'm going to invest for a house mortgage deposit. The great thing about this is that the money will compound and grow with a higher interest rate if you invest it into a diversified index like the S&P 500. The average savings account offers 0.06% APY, whereas the S&P 500 returns around 8% each year. So for saving goals that are further into the future, there's nothing wrong with saving in an investment account. If you've invested money for a longer term goal and you've managed to achieve it, sell and don't think twice. That's a great investing success and you should use the money for whatever your original goal was. You earned it after all. The stock market can be unpredictable. Just take the madness of GameStop for instance. Sometimes the stock market will overvalue the stock and set a market price that doesn't seem to correspond to the expected earnings of the company. Similarly, if the earnings expectation of the company dips but the stock price hasn't, it's probably only a matter of time before the stock decreases too. In either of these cases, you might want to consider selling and crashing in the profits before the value crashes. Now, if you're serious about making money in the stock market, you should always be on the lookout for new opportunities. If you spot a stock that you think has a lot of potential but your money is tied up in other investments, you may want to sell your existing stocks. Even if your stock is performing well enough, if a better opportunity comes along, it can pay to jump on it. Of course, there's no guarantee either way whether this new stock will perform better, but you could be missing out if you play it safe and don't make that leap. Whatever you do, make sure it's a calculated and well-researched move. Don't do it on impulse. If none of the above applies to you, then in most cases you should hold on to them. Yep, even if your stock dips. There's never an easy way to work out when to sell stocks. Just because your stock has dropped doesn't mean you should panic sell. It's all about context. The next time you see a stock tumble in value, ask yourself this: is the wider market seeing similar dips? Or has something happened in the company or the news to make it dip? Or has the company performed this way before and recovered? Or what does the competition looks like? If they haven't dipped either, find out why that is. Asking yourself these questions before you rush to sell will save you a lot of headaches in the future. The last thing you want to do is sell and then see the stock recover soon after. You'll be left kicking yourself for selling. Stocks will usually recover even if there are dips, so waiting it out is often your best bet. That is, unless you have a good reason to believe the stock won't recover. So that's it guys for this video. If you enjoyed it, don't forget to hit that like button and subscribe to the channel for more videos like this. Until next time, bye bye.